Hey, how's it going? My name's Hayden. I'm the founder of My Property Stats, and I want to show you around what we've built here to make your life as a real estate investor a whole lot easier, and how I'm using this new system to analyze, find profitable investments, and keep track of them in the most organized fashion I've ever done, thanks to this new My Property Stats platform. So traditionally, what doing due diligence and analyzing properties is a little bit something like this. I'm gonna share with you what my Google Drive used to look like as I try to keep up with all these properties. And so as you can see here, I just have a ton of different spreadsheets, and I had to go through and find and analyze each of these different spreadsheets to try and keep up with my portfolio and keep everything organized. But let's take a look at what My Property Stats has done as a way to revolutionize the way that real estate investors are buying properties now and how they'll manage their portfolios in the future. So I'm gonna sign into my account here and show you guys what it looks like. And I'm gonna go to the pipeline feature. And the first thing that we can see here in the pipeline feature is that I have a couple of different deals in my analyzing section. And one of the things that I love about what's going on here is that each of these deals, it shows me a snapshot of everything that I'm looking at. It shows me the cash in the deal, which is how much money I'd have to put in to invest in this, my down payment. Shows me my cash on cash for year 1 and my IRR at year 5. So from a very quick glance, I can see all the different deals I'm analyzing in their key financial metrics, which I really like. So also we have our pipeline, which is the deals we're analyzing, deals that we've made offers on, and also deals that we have under contract as a way to keep track of where everything's at in the process and help you buy however many or however little properties you want to buy in an organized format. So what we've done to eliminate the spreadsheet conundrum, whether it's on your own desktop, or whether it's in Google Drive, or wherever you're currently hosting it, let me show you. Let's dive into one of these properties right here, and I'll show you guys what it looks like. And so we can see when we get inside of actually analyzing a deal, this is what I think is the world's best deal analyzer. I've analyzed a lot of deals in my day, and this right here, I've seen a lot of different deal analyzers. I wanted to aggregate and give you, as an investor, as many options as possible to analyze however many different kinds of deals. So this is a self-storage deal I'm looking at, but we could really analyze anything from residential deals, multifamily deals, self-storage, retail, Airbnbs. It doesn't matter. This system analyzes any type of real estate deal. And so we also have the ability to analyze it on a cap rate or fair market value, depending on if it's a residential house or a commercial property. So we could dive into this real quick, but I want to show you how this helps you as an investor keep your stuff organized. So one of my favorite features in here, you may find that as you try and transfer documents from investors or bankers or insurance people or whomever it may be, attorneys, you find documents flying around in a lot of different places. What we've done at My Property Stats in order to make that a lot easier for you is we've created a due diligence Dropbox inside of your deal analyzer that's inside of your pipeline. And so as you can see here, you can upload all of your important documents, and at the click of a button, you can download this into a zip file and send it wherever you need to go in an organized format. And so let me show you real quick what that looks like. Here's one that I recently downloaded, and you can see that I have all of my documents, no matter what kind, whether it's an Excel file, a PDF, a JPEG, it doesn't matter, Word documents, it stores any kind of files, and you can easily share those with whoever you need to share it. Also, I've built in some custom categories in here that I think that you're going to want to use, but if you find anything that I don't have in here, you can create your own custom category here and name it whatever you want. So if you want to name it random documents, you could do that here. And whenever you create it, you'll see a random documents, and you can upload as many documents or as little documents as you want straight from your computer, which holds great power. And so that's how this is making the organized fashion of buying and analyzing real estate deals a whole lot easier. Now let's talk quickly about how this works and how you can go out and analyze deals. And so the first place to start is the purchase info. So how much are we paying for the property? What kind of property type is it? What is its value? And then we move on to loans. What kind of loans are we going to get on the property? How much are we borrowing? Here I have 70% of this, but if I wanted to change it to 80%, this would automatically change how much I'm borrowing in my payment. I put in here my interest rate, whether it's an interest only or normal loan. What is my amortization schedule? So here I'm borrowing for 20 years, but I could be borrowing for 30 years, or I could be borrowing for less. If I've got any points I'm going to pay the lender up front as a loan fee, when the loan's going to start, and if I have any prepayment penalties. A lot of the investment properties that we buy have prepayment penalties on this, and this gives you the option, if I do want to have a prepayment penalty, my system will analyze that prepayment penalty right here for me and calculate that into my returns. And so I've got a 3-2-1 prepayment penalty here, but you can add as many years or as little years of prepayment penalties as you want. Next up, we have improvements. So whenever we're talking about improvements to a property, sometimes we buy properties that need some work. So I've done a cool thing here. Let's say that we know that the property needs a new roof. And this property, for example, is 13,936 square feet. Well, let's say I know that roofs cost $3 a square foot. Just to make this quick and easy for you, we can go to the cost type method, number of square feet, and we can plug in 3 right here for $3 a square foot, and that's automatically going to calculate for me how much money I'm going to have into this roof improvement, $41,808. Now, sometimes banks will give us loans on doing these improvements, and I can select that. Yes, this will be a loan that's financed, but this will be an improvement that's financed by the bank in my first loan. And so as we can see here, the new amount is calculated, and you just have to come over here and plug that amount in, and it'll update all of this for you. So what's really cool about this is we can choose to do this method, or we can choose not to do this method. We could just have a flat amount. If I know I'm going to spend $10,000 on, say, landscaping or whatever it is, I can just plug that in. No, it won't be financed. Or if I have multiple units and I know I'm going to spend a certain amount of money per unit, I can click that. Let's say I know I'm going to spend $500 a unit, and it'll automatically calculate it for me. And so I think that's a really cool feature that can save you some time. And so next up, we have closing costs. Whenever we look at closing costs, I generally like to look at how much money, just as a percentage of the whole, am I going to be spending on closing costs. That's attorney's fees, transfer taxes, things of that nature. I generally like to estimate that between 1 to 2% of the deal. In this case, we're buying this deal for $855,000, and so 1% would be $8,500, 2% would be $17,000. And so I'm just going to come in here and I'm going to plug in our general closing costs. And so I'm going to put in here $17,000. And what that's going to do is it's going to tell the system that I'm going to incur that cost. Now, next up, I know that I need operating capital for my business. And so operating capital for me is the money that sits in that investment whenever I'm operating it while I wait for money to come in or money to go out. And so for me, I generally like to do 2 months of all expenses. That includes the loan. So you can come in here and select which expense you want and how many months you want in that reserve. And so I'm going to just check all of my boxes and tell my system I want 2 months in here, and it'll automatically calculate for me how much money I need to have in there. But if I only wanted 1 month, then we could come in here, we could select 1 month, it'll calculate it for us. And then as we have 2 months, it'll show exactly how much money we need to have in here. Now, we're going to move on and talk about timing of this deal. Whenever you bind the contract and you start to move into due diligence or your financing contingency, then you can calculate here how many days and when your timing is. So if we bind this contract on September 7th, 2021, and we have 30 days of due diligence, this will tell us when our due diligence, our finance contingency, and when we need to close on this deal by, which is really powerful. The next up is we have other closing items like property tax prorations and insurance bills. The cool thing about this is it estimates how much your property tax proration is going to be, and it allows you to put in here exactly how much that's going to cost you, and it'll increase your deal if you're going to be paying property taxes, or for some reason you're going to be losing money, then it'll track that off of how much money you need to close this deal. It does the same thing for your insurance bill and your rent proration. If you're buying in the middle of the month and you have an investment property and you're going to be getting credited some money for that month's rent, you can come in here and let's say we're getting negative $500, meaning the seller owes us money. That's going to detract from the amount that we need to put in that deal. So these are all really powerful features. Now, this is just the purchase info. This is where you're setting yourself up to perform the rest of your analysis. Then we're going to move over to income. We're going to put in here our different unit types. So here I have climate controlled and non-climate controlled. This is self-storage. The average size is 100 square feet and 110 square feet. I have 9 climate controlled and 96 non-climate controlled. And here's my market rate. It's $110 and $95. This gives me how much money I can make a month and how much money I can make a year. And then I can also tell my system how much is this going to increase through time. And so all this is really powerful. But if the property isn't stabilized, I can also tell my system that it's not stabilized, and I can tell it, hey, you may have the potential to collect $121,000 in year 1, but because there's not a lot of people in there, we're only going to collect $30,000. And so I can do the same thing as I come through the other years here and tell the system how much money I want to analyze. The system can also help you predict how much money you're going to be collecting based off of your physical your physical occupancy rates and your concession rates. And then you tell the system how much at its capacity is it going to be bringing in. That's normally around 95% physical occupancy and 100% of concession rates. Next up, we can add other income items like late fees, pet fees, insurance, whatever it may be. We can add those in this section right here, and we have the ability to add those above or below the NOI. And if we ever have one-time income, like if we're selling something that came with the property, we can put that in here as well. Now, the entire purpose of this is to build out a pro forma, which we're going to go over to in a second. But before we see our pro forma, we need to input our expense information. And so our expense information is right here. We come through, we plug in line by line how much we're going to be spending per month at this property. Now, there's really a couple different ways that you can analyze how much you're going to spend. Number one is just a flat amount. If you know insurance is going to cost you $500 a month or $6,000 a year, you can just plug that in. But for payment processing or property management, you can choose as a percentage of revenue. So here I know my payment processing costs me 2.4%. Or I know my property management costs me 6%. And so the system is automatically going to calculate that for you as the years go through and tie it directly to how much money you're actually going to collect. Now, we have some other stuff like software, property management, on-site management, repairs and maintenance. And so one of the cool ways that you can do this too, in addition to flat amount or revenue percentage, is per unit. So if I know that repairs and maintenance on average is going to cost me $2 a month per unit, then I can tell the system it's going to cost me $2 a month per unit. Other areas, maybe if you know you have pest control on a 10-unit building and it costs you $20 a month per unit, you could plug that in here. It's going to calculate all that for you. Now, just like we had one-time income, we could also have one-time expenses. And so if we have any one-time expenses, we can plug them in here. Our next feature up is property tax calculation, which is really valuable. Most people miss when they buy a property, the tax value is going to go up. And so here we enter in how much the current property tax bill, how much the tax assessor currently has the property assessed at, and this will calculate our new property tax bill for us, and it'll plug it into our expenses for us. This is based off of how much you're doing in the purchase price. So as we see here, $17,639 is the estimate of your new property tax bills. But let's just go change the purchase price. It's at $855,000. What if we change it down to $700,000? What does that do to our property taxes? Well, if we come back to our expense section, we can see here that it's calculating, instead of $17,000, it's now $14,000, right? So the system will analyze and update everything for you as you go through and fill out this deal and find a price you want to pay. And so now that we've done our operating expenses and our property taxes, we tell the system if we were to ever sell this, how much would it cost? This is a commercial property, so I plugged in 3%, but let's use the standard residential rate of 6%. Now, we've got everything done. We want to bounce over and we want to see the pro forma that's been created for this deal. So I'm going to click on pro forma. It's going to calculate for us, which is going to take just a second as it runs all of those numbers for you. And what we're going to get is a 20-year pro forma. This is going to show us everything from how much money we have to our NOI to how much money we're going to pay the bank all the way down to our cash flow. And it's going to project this for us every single year over 20 years. So this is your income statement. This is where your cash flows are found and your expenses are found. Then we move on to our balance sheet. Because this property was tied to a cap rate, we're going to get our value based off of the NOI of the property. If this was a residential property, you would input how much the property's worth and how much the rate of that property is going to grow by. And so we see here that the property value is tied directly to the income and it goes up through time. So in year 5, this property is worth $1 million. We have working capital of $16,000 if we were to sell it. We'd spend 6% on our fees. Our mortgage balance, which started at $700,000, has been paid down to $590,000. Our prepayment penalties have gone away. And if we were to sell this property, we'd have $389,000 of proceeds. Well, if I go down here at the bottom, our cash in this deal was $178,000. So we've made some money. If we were to do any refinances or if we were to get second loans or anything like that, we would see the money come from that here. And all we would do in order to put those into play is we'd add a new loan. We'd come down here to loan number 2 and we could tell the system that we're getting another $100,000. We're getting that $100,000 at, let's say, 5%. And let's say we are not refinancing any loans, but let's say this starts in month 1 of year 3. And this is a 240-month, a 20-year loan. We'll come over here, we'll come back to our pro forma. It's going to recalculate for us really quickly. And let's see what happens. And so we'll see our money, our cash inflow from our new loans in year 3 was $100,000, and we got that money. Now, the entire goal of all of this is to see, is this a good deal or not? And that's what these metrics down here for, our cash on cash and our IRR numbers. Now we have our LTVs and our debt service coverage ratios, which are all very important metrics, but really the cash on cash and the IRR are the really important metrics that I like to look at. As we can see, this deal starts out negative because it started out losing money and eventually gets to a positive place. And the IRR, 5-year IRR, 14.5%, which is pretty strong for a deal. But the point is knowing your numbers and analyzing deals and comparing them apples to apples as we come through here. A really cool feature about this is we have executive summaries, but one of my favorites is a goal seek. So let's say that we had the goal of we wanted to hit, I don't know, call it a 10% cash on cash in year 3. So what I could do here is I could tell the system I want a 10% cash on cash in year 3. It tells me my current rate is a 2.47%, and I'm going to seek that answer, and the system is going to calculate exactly how much I should pay for this. It's changing everything from my loan amounts to my, it's changing my property taxes. It's changing all of that. It tells me right here I should pay $735,000. I can click fill in that price, and it automatically changes the entire pro forma for me, which is really, really cool. Now, the last feature I just want to tell you about really quickly is this compare tab. So if you had multiple lenders, let's say you had 3 different lenders that all want to give you different loans, you could come in here, you could create a duplicate of this, and let's go create a duplicate real quick to see what happens. So I'm going to come in here, and instead of this loan that the bank wants to give me, let's say that I could go get a special 90% loan, or maybe let's just say I could get a 70% loan, which will be a little bit different. We'll come in here, and let's say I don't refinance in year 2. Okay, so I'm going to delete that, and then I'm going to view my results. Let's see. The deal didn't change, right? The only thing changed was my financing strategy, but you could compare anything. You could compare, do I want to do an expansion? Do I want to raise rates? Do I want to do a rehab? Do I want to spend more money in improvements and raise the rates? You could do whatever. But what we're going to be able to do here is we're going to be able to compare deal number 1 to deal number 2. And so the blue line here is deal 1, and the green line is deal 2, as you can see labeled up here. And we're looking at the cash on cash metric. So as we go through time here, you can see it gives us the different ones. See, deal 2 is winning until deal 2 isn't winning. And so it's really cool to kind of compare apples to apples here, and you can see all the specific stats down here, from cash in the deal to equity multiples to cash on cash. And you can also choose, do I want to see the IRR on this graph here? Neither of these deals have any positive IRR in year 1 or year 2, but you can see here that deal 1 is the right answer if you wanted the higher IRR. So this is the My Property Stats system. Thank you for taking the tour. If you have any questions, hit us up in the chat box down here. We'd love to answer any questions. Otherwise, let's get started. Sign up today.